Hello and welcome to a new morning briefing presented by Stein Investments. Yesterday I spoke about the total trading volume and how it wants us to stay out of the market, and today I'd like to lead the focus to FX dynamic and the current volatility, because I noticed that we might adjust our standard settings, and I will show you why this is relevant when showing you the trade examples later in this video. So when checking the chart this morning, I noticed that almost all currencies are currently in a neutral area, and I was not quite sure if these values really fit to what we've seen the past days. And the reason is pretty simple. If you use an ATR of the past 20 days, then it counts the volatility of each of these past 20 days, and if the last 3 or 5 ones have been very volatile, this is less relevant due to the mass of data to consider. But I guess this approach is kind of too slow, because we have to adjust to the current market volatility more quickly, and that's why I added another instance of FX Dynamic with a 5 days ATR, and then we can see a clear difference to the 20 days ATR calculations. Gold has here a range of more than 850 pips, while it's only 470 on the 20 days ATR. And if we consider only the last 5 days of market data, then we see that today is a day with very low volatility, because most of the currencies are floating between 50, 60, up to 70% ATR. This is not much compared to what we've seen the last days. And this, for me, fits the current market situation way more than the 20 days analysis on the right, which contains a lot of data that happened before Trump announced his new tariff policy, etc., etc. So if we like to achieve a more adaptive approach to the current market situation, we should use only the most recent data to calculate the volatility of the currencies and trading symbols we trade. That said, we can close this topic and get back to it if we review the trades of tonight, because tonight we've got another correlated currency trend here with the Aussie dollar and the New Zealand dollar, and trades have been executed from our test EA, and this move was also covered by rising interest in the market. So it was just a slight increase in interest in both of these currencies, but the overall tendency was a rising interest in new trading positions, and this is definitely better than the panic mode we've seen yesterday with most traders closing their positions. So it was good to go, and I have to say the EA itself doesn't care about the volume currently. It just executes purely based on the FX power strength analysis. Let's have a look at the trades. And there you see Aussie dollar, New Zealand dollar are rising, and the euro is falling against the New Zealand dollar. The same move across all currency pairs that are related to both of these currencies. And this is where I noticed that my ATR based stop loss is probably way too tight, because the trading direction was perfectly correct, but the trade was stopped out very early. And the reason is that I'm using a 20 days ATR, as we always do. That's how we work with standards, but sometimes it's better to rethink a standard, and you notice if that things don't work as expected if you let an automatism run a strategy with the parameters you set. And here it's definitely clear that I wouldn't have traded this manually with such a tight stop. This is way too close to the current market price, and that's exactly why we've been stopped out here. And the next trade worked. Then there opened another one, and you can also see there is another tight stop here. We've been stopped out pretty quickly. In the end, I have to say the strategy is just outstanding. And I hope you don't mind if we don't share too much details, because competition is always listening, and sometimes we have to be a bit more restrictive to keep the edge we achieved by our own work, by our brains, by what we are doing here every day. We are always here to support you. So if you have a question regarding the strategy, how to execute, etc., etc., we are of course willing to support you and to guide you and to help. But we are currently not willing to share every detail in public, because sometimes you have to keep your knowledge with you to keep the edge, which is good for us as company, and secondly for you as customer, because we have to keep our edge to remain consistent as company and provide you the same excellence we've done in the past 10 years for the next 10 years. So whatever you want to know, just drop me a line either below the video or via MQL5 or via direct chat in Telegram. I hope you understand our point of view, and I'm looking forward to get in touch with you. So that was the part of our latest experiments, and last thing I'd like to share, we are already at 17.5% profit with this strategy. It could have been more. You see, there has been a few unnecessary loss trades due to false settings, but doesn't matter. We are still extremely happy with the result, and this will continue like that. Maybe Japanese yen and Swiss franc will trigger the next execution. So just keep an eye on correlated currency pairs. This is definitely something to look out for. So let's move on to our currency overview and the current trade situation across all the currencies. We monitor the euro is split with long term on neutral and the other ones weakening, while British pound is already pretty weak, showing currently some up dynamic, which probably don't last long. I expect the British pound to fall short term back to the short side. US dollar is neutral. Canadian dollar is heading towards neutral with some short dynamic. The Swiss franc is currently rising. The Japanese yen is also rising. We've seen that in the last chart where we've seen the correlated currency trend move. And we'll see how this will turn out during the next hours. Then the Aussie dollar is more on the weak side, as well as the New Zealand dollar, but this is also a split situation with the midterm trend still on the long side, moving slowly towards neutral. So if you want to trade anything today, I highly recommend having a look at the Swiss franc and Japanese yen pairs. Last but not least, our non-forex analysis, starting with the Bitcoin, which is pretty stable below 80,000 US dollar. So far away from its high a few weeks ago. There is currently no trading setup inside. So oil is currently ranging, but is showing us still a stable downtrend. So it's possible that if the price goes back to this resistance zone here, we get another easy scalping scenario as we've seen it here or here, where it triggered at first, or this one. So either way, whatever you trade, just set the stop a bit above and you are good to go on the short side. Dow Jones is extremely mixed. It's still weak, slightly heading to the neutral area, and the one-day analysis is showing more strength. So there seems to be a kind of hope that the tariffs don't come as hard as announced, but this is just rumors, and it's still an extremely volatile market, and I wouldn't bet on it. I admit I avoid this because there is too much non-facts involved, and in this case I definitely prefer to stay out. Anyway, German DAX, same situation, pretty similar to the Dow Jones. It's undecided, it's still a light sell trend with mini upwards dynamic. This is just a ranging market, and I clearly avoid that as well. So that said, our best strategy we currently have in our portfolio is the correlated currency strategy, and we are focused on that one to improve the EA and maybe create a market product for you if it is going on like that, because the performance is, even though there are some unnecessary SLs, is really, really impressive. So stay tuned, and I catch you in the next one.